Good morning. I'm Brian Curtis.
And I'm Doug Krisner. Here are the stories we're following today.
Breaking news here on the Bloomberg Terminal. Let's get right to Ed Baxter in San Francisco. Ed.
All right, Brian. Yeah, this is the U.S. Supreme Court ruling that Alabama can go forward with the country's first execution by nitrogen gas. It will be the first time using this method and the first execution by a new method since 1982. The execution is scheduled for tonight. They plan to put a face mask on 58-year-old Kenneth Eugene Smith and replace the air he is breathing with nitrogen to cause oxygen deprivation. Smith's attorneys have argued that the state is trying to make him a test subject for an untried execution method. He is one of two men convicted in 1988 murder for hire, slaying of a preacher's wife. The other was executed in 2010. Senate Republican leaders are working to try and save an emerging Ukraine and migration deal today. It looked earlier in the day like they were coming together, and then Donald Trump entered the fray, telling senators and House members not to vote for any compromise. Does this blow the deal for Ukraine and the border? Well, Bloomberg's Jonathan Tamari says not yet.
I think what we've heard from Republican senators today is say that, yes, McConnell was acknowledging the political reality that there's a real challenge to any deal here, but he wasn't saying this deal is off, this deal is dead. And there are a number of Republicans who came out today and said they want to get something done. They see this as a once-in-a-generation chance to actually get some of their tougher border policies enacted.
Now, McConnell had reportedly gone so far as to suggest that possibly Ukraine aid could be separated from the border policy. So we'll see where that goes, but how does this play going forward with Trump inserting himself here? Well, Senator Mitt Romney is not a fan.
Former President Trump has indicated to senators that he does not want us to solve the problem at the border. He wants to lay the blame for the border at Biden. And the idea that someone running for president would say, please hurt the country so I can blame my opponent and help my politics is a shocking development.
So will Trump be jumping in on every bill going forward then? He is being played by many in Congress now as a GOP nominee. Nikki Haley does not think so.
We have raised $1 million since I gave that speech last night online in small dollars.
And her super PAC has raised $50.1 million in the last 6 months, which is more than Trump has. She says New Hampshire was actually invigorating, that it was closer than many thought it would be. South Carolina is, how shall we say, extraordinarily important, February 24th. Donald Trump was a witness today in the civil suit involving E. Jean Carroll's defamation and rape. He was on the stand for less than 5 minutes, a reflection of strict limits imposed by the judge about what he could say. He said he stands by his deposition that he did not rape her and left the courtroom with a scowl, reporters say. He said this is not America. And Vladimir Putin is testing the waters on whether the U.S. is ready to engage in talks for ending Russia's invasion of Ukraine. Bloomberg reporting he has gone through indirect channels. Global news 24 hours a day and whenever you want it with Bloomberg News Now. In San Francisco, I'm Ed Baxter, and this is Bloomberg. All right, guys.
Yeah, thanks very much. 6 minutes past the hour. Now it's time to take a look at some of the top stories of the day. Well, we mentioned that Intel disappointed with its earnings and the stock got slammed, but then GDP did exactly the opposite, encouraging investors. But Doug, you know, for a lot of people, taxes is probably number one. And we had U.S. Treasury Secretary Janet Yellen weighing in on the Biden administration's tax policies today. She said the White House is keen on making sure that the middle class gets a break, keeps that break. They'll do that by retaining some of the tax reductions that were enacted by former President Donald Trump. Here's Yellen.
President Biden made an ironclad commitment to not raise taxes on those making less than $400,000 a year. There are some proposals to, including, there was a corporate alternative minimum tax that was passed, to ask corporations and the wealthy to pay their fair share.
Janet Yellen has said that new revenue sources will have to be found in order to pay for tax cuts that are being extended.
It's very interesting, Brian, because just yesterday we heard from former U.S. Treasury Secretary Bob Rubin, and he was saying, hey, the U.S. is in a terrible place with regard to that federal deficit, and the way to solve it would be higher taxes. We're keeping a close eye on that story, to be sure, as we get more deeply into this presidential election year. Let's get to Amazon, Alphabet, and Microsoft, three companies subpoenaed today by the Federal Trade Commission. The FTC is gathering information on the company's investments and partnerships with AI startups, Anthropic and OpenAI. Here is Bloomberg's Jennifer Rhee on where this investigation may have originated.
An investigation is open when the FTC may have some concern or some suspicion that laws have been broken. A study is just meant to learn about a business, to learn about an industry, to understand these investments. They have concern about the dominance of these big tech companies. They have concern about AI, which is rapidly becoming, a part of our economy. And I think they just want to make sure they're ahead of this and understand what's going on.
Bloomberg's Jennifer Rhee there. Now, the probe is focusing on investments by Microsoft, Amazon, and Alphabet worth a combined $19 billion. It was on Thursday the FTC warned the AI companies cannot use claims of innovation as cover for breaking the law. Brian?
So we talked about stocks getting up to all-time highs again, and part of that story was the strong GDP report. But also the earnings have been pretty good. However, we've seen quite a few weak forecasts, Doug. The beat rate is still up around 80% or so, and so that might justify some of these gains in stocks. But we're hearing from more and more companies, Tesla being one and Intel another, where they have actually given pretty weak forecasts. Listen to these numbers. Intel said that sales in the first quarter will be $12.2 to $13.2 billion. Analysts were estimating $14.25 billion. Now, the outlook suggests that CEO Pat Gelsinger still has a long way to go in restoring Intel's former prowess. Here's Dan Morgan at Synovus Trust.
I was really looking for a little bit of a rebound here in regards to PC chips. We know that Intel is behind both AMD and NVIDIA in regards to AI. They had a pretty strong quarter last quarter in terms of that client computing group, so I was expecting that momentum to kind of carry over and maybe get a beat. But they came in line, which was fine. But obviously the guidance for the first quarter was very disappointing. We're hoping for a little bit better than that.
So that guidance had the stock down 9% in after hours. And by the way, that was Dan Morgan there at Synovus Trust commenting. It's worth noting that the chip maker's PC business is recovering, but the company has been losing ground in the lucrative market for data center chips. All right, let's get to really our top story, I suppose, today is the GDP report, because it did spruce up the markets. By the way, I'm Brian Curtis along with Doug Christner, and we're joined on the line now by Estelle O, who's U.S. economist for Bloomberg Economics, to take a closer look here. What's interesting is that people took a lot of heart in this, Estelle, because that number, 3.3%, was sharply higher than expected in the fourth quarter. But I note that Bloomberg Economics still sees a recession coming, and the team says there's a possibility that these GDP numbers will be revised lower. Spell that out for us.
That's right, Brian. It is it's a surprising print that we got earlier this morning, and it on the surface of it, it does look like it's a very strong print that is just screaming soft landing, and that's definitely a little, not to say a little, but contrast with our current view that, we still expect U.S. economic growth to slow down in 2024. And the reason for that is because if you look under the hood of today's 4Q GDP print, you'll see that most of the bulk of the growth was actually driven by consumer spending, but also upside surprises from more volatile categories within the GDP, such as trade and government spending. And it's purely because of the fact that more volatile categories drove the upside figure this morning that we don't think this strength will continue. And that's why even though today's GDP print was a good indicator of how the U.S. economy is faring, we are not convinced that strength will continue going forward.
Okay,
and
so
yes,
Estelle,
we are
I'm going to
convinced
push
that it will
back.
be revised.
I'm going to push back a little bit because that PCE, the core PCE, was only up 2% for a second straight quarter. So clearly, underlying inflation is coming down, and I think it gives the Fed a lot of wiggle room here, particularly if they would be concerned at all, and when I say they, I'm referring to policymakers, about some of the potential stress in the credit market as we see some of these older loans roll off and the pressure for companies, banks are included in this, to roll over some loans at a rate that, if the Fed is not aggressive in lowering rates, would be at a rate that's higher than those original loans were priced at. Is that a fair statement?
That the risks, are completely legitimate concerns, but I'll just say that we think the Fed will view this GDP along the lines of how we're viewing it, and that it shows that we've made good progress on inflation. The U.S. economy is still strong, but we don't think the Fed will take this as to mean that strength will continue forward. In that sense, the Fed still has incentives or has justifications to lower rates before these companies need to refinance their loans in the next couple of months or years. Does that make sense, Doug?
Yeah.
Well, we mentioned that GDP was 3.3% and personal spending rose at a 2.8% rate. So that's almost in sync. But as you say, it suggests that there was a little bit of the slack made up by business investment and housing help there. But I don't see anything in that spending by individuals of 2.8% that suggests that it's going to fall apart. And even 2.8% would have been a pretty solid number for GDP.
Yeah, definitely. So if you look underneath the hood of the consumer spending category, you get a really broad mix of strength in spending in different categories. But the one category we're really paying attention to is the slowdown in spending in food services and restaurants. Now, Brian, if you recall, throughout the whole pandemic reopening phase, one of the pillars of the U.S. strength in the U.S. economy was consumer spending on, restaurants, dining out, travel, accommodations, and we're finally seeing spending in that category pull back, and that to us is an indication that consumer spending on discretionary services, food services and accommodation is among the most discretionary services spending consumers can choose to spend on. That pullback is an indication to us that consumer spending will unlikely continue to be a strength going forward.
Estelle, do you have a sense as to when the labor market is going to begin to crack or to show signs of cracking?
So, we definitely started seeing signs that the labor market is continuing to is showing signs of cracking in the December non-farm jobs report. Particularly, we're seeing a rise in the duration of people staying in unemployment, and that to us is a good sign that we're at a tipping point where either the labor market could completely accelerate in its deterioration trend, or if that figure comes back down, then it may mean that we only saw a blip, a small downturn in the labor market, and we may be seeing a recovery already. So we're really looking at the non-farm payrolls print next week closely for more signs of further deterioration in the unemployment duration rate, to answer your question.
Yeah, we had initial jobless claims going up, so that's a little bit worrisome. They did rise 25,000 to 214,000. What would a number be that would further emphasize your point and would be, let's say, scary for those people worried about jobs?
So usually, right now, unemployment rates are definitely lower than prior to previous downturns, and we would need to see a fast acceleration in the rate of change. So we're not really that concerned about the level. We're concerned about the rate of change. But I'll just know that we don't really take as much signal in the unemployment claims figures right now, but because we've noticed that the series is actually artificially, it may be artificially lower than it should be because of the amount of people who are ineligible for unemployment claims and don't even apply for unemployment claims because they already used up their eligibility throughout the past few months.
Estelle, very quickly before we let you go, in about 20 seconds, right now the swaps market is indicating the Fed will cut in May, let's assume 25 basis points. Total rate cuts this year around 140 basis points. Are you okay with that, or do you push back on it very quickly?
So we actually think there's a chance for a March rate cut because we believe that core PC inflation is on a fast track and likely to undershoot the Fed's target, giving the Fed justification to cut rates earlier.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcast.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Doug Krisner. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.